Founders, entrepreneurs, startups, I make this video so that you do not make the same mistake I did, or at least you stay vigilant and ask the right questions, because I do believe some of these capital advisory groups are legitimate and can close a deal for you. But I think you really got to ask all the questions and really make sure that you make the right decision with the right group. This is specifically about my experience with Cadenwood Capital. And so I'm going to run through it. There's lots of notes here, but so excuse me while I read from it because it's a lot to unpack. I will make it a quick video. It'll be under 2, 3 minutes or so. So here we go. Let's jump into it. I'm sharing this because I wish I found a post like this before signing with Cadenwood. We paid Cadenwood Capital approximately $30,000 because they represented that they could introduce us to family offices and investors that were actively looking to close deals. We expressed significant skepticism from the beginning, excuse me. We had been pitched by fundraising groups before, and we repeatedly explained that we are not a tech startup, we're not an app, we are not the type of business that most family offices typically chase. We're a service company. The response was always the same. Our company was doing nearly 4 million in annual sales. It had significant growth potential and would be attractive to investors in their network. They repeatedly assured us that we were talking to the wrong people and they could get a deal done quickly. To be fair, the materials that they produced, they were well done. The problem was the results. Over the course of the engagement, we received only a handful of introductions. The most significant led us down a path which appeared to be a legitimate family office. We did some research ourselves. Caden would vouch for the opportunity. The investor sent a letter of intent, and everything appeared to be credible. Credible enough that we flew to Amsterdam and finalized a deal, a $2 million deal. It turned out to be fraudulent. Yes, you got that right. By the time we realized something was wrong, we'd already spent thousands of dollars on travel, lodging, investment, significant time preparing for the transaction instead of focusing on operating the business to the tune of like $9,300. What shocked me the most was Cadenwood's reaction afterwards. During the discussion about the situation, they indicated they had seen something similar happen with another client that allegedly lost hundreds of thousands of dollars. That statement raised a huge red flag for me. If you've already experienced something like this, why wasn't there more done substantially to scrutinize and vet these people before introducing them to another client? At the end of the day, we paid roughly $30,000 in fees, spent additional money on travel, and never got close to a legitimate investment opportunity. We never even reached the point of meaningful due diligence with a serious investor. No transaction materialized, no capital was raised. My personal opinion is that Cadenwood's sales process and actual investor network are two very, very different things. Maybe they can be successful for a specific type of company. I can only speak to my experience in my case and the promises that were made during the sales promise that were nowhere near close to the results that were delivered. The biggest lesson for me is that I ignored my own instinct. My gut told me this sounded like another fundraising intermediary making big promises about investor access and fast closing. I wanted to believe that this time it was different. It wasn't. If you're considering hiring Cadenwood or any advisory group, ask detailed questions about their actual closed transaction, investor relationship, vetting process. How many clients like yours have successfully raised capital through their network? I wish I had, and I hope to prevent this from you making the same mistake, I should say.